Thank you for joining iMeet. When you hear the tone, you will be the 21st person to join the meeting. This meeting is now being recorded.
Hey everybody, good afternoon. This is David Blake with Tech Talk Tuesday, and we're going to look at a couple charts here real quickly, and then we're going to do something a little bit different. Most of you by now should be accessing the new MarketEdge website. We're going to spend some time going over some of the changes. Hopefully we can get you to send in some questions if you're wondering where certain things are, or what some of the new features are, where to find certain stuff. And I'll have Matt Sandy come on here in a little bit to give you a demo. But first, we're going to go over a few things that I wanted you to look at in the market. We're still having this parabolic move, have a little bit of a pause today. But there's one particular thing that I wanted to get out to you all. So real briefly, quickly here, we're going to try to look at a couple charts, and then I'll turn it over to Matt. Here's the Dow Jones. As you can see, how far we're extended over here. It's still, like this parabolic move here is just, unbelievable. Just goes up every day. We are overextended. We're overbought. I think as of the close yesterday, we were almost 9.25% above the 50-day moving average. That's, I believe, that's the highest this year. And rarely do you see the market get more than, like, say, 8%. That's really overextended. When you get there 9.5%, 10%, you're really overextended. So that's just something to keep in mind. The CTI is still negative. I had a couple questions about that. We had some little bit of minor pullbacks in the technology and the Nasdaq a little bit, and the Russell and Dow Jones transports, but the cycle is still only going to a -3, which means we weren't looking for much of a pullback. The person who wrote in asking about the negative CTI, I said if you do need to read the weekly market letter that comes out Friday after the close, just because we're negative isn't like we're not going to ring the bell and say, okay, now the market's going down. I have been pretty explicit that the market was, we're still going higher. There's nothing that any divergences that are really concerning. You're always looking for something, like maybe breadth isn't as expanding as much as you want, but I still don't see any signs that this thing is due for a pullback to the 50-day, which a couple weeks ago it was only going to be like a 2% move. Now the momentum index is a -7, and some people wonder how that can be with the market making new highs. The momentum index measures how the other indexes are doing versus the Dow Jones, and ideally you want to see some of the other indexes outperform the Dow. But right now, the Dow is just beating everything handily. And historically, when that happens, it doesn't end well. What has to happen is the other indexes have to catch up to the Dow, which means we're going to have a parabolic move in the other indexes too, which I kind of doubt at this stage. Or the Dow Jones will have to slow down or pull back to come in sync with the other averages. Our sentiment's still negative. You still can't find any bears on the street at all. And so why is that? If everybody's bullish, why is that negative? We always look at sentiment as kind of a measure of extremes. If everyone's too bullish, there's nobody around to put money back into the market. If everybody's too bearish, everybody's on the sidelines, so there's no money no more selling that gets done. A lot of margin is very high in here, so you may have people still borrowing money to buy stocks, but we may be at a record level in margin debt, so that's something to be concerned with also. If the market would start to pull back, you're going to have margin calls, that type of thing. Also, Charles Schwab reported this week that their client cash reached its lowest level on record during the third quarter. Now, that's a contrarian indicator, again, because if everybody's fully invested, you don't have the funds coming in that are going to propel the market up higher. No one's going to be buying. So that's something, a contrarian indicator that you also want to watch out. We talk about the percentage of bullish investment advisors, how that's been above 60, which is a dangerous level most of the year. And again, if all the brokers and all are bullish, they're running out of money at some point to throw into the market. So real quickly here, we'll probably see the Dow hit 25,000, could be as early as this week. The technical indicators on the indexes that we're going to look at are still bullish, overextended. They say above 70 is on the 14-day RSI is overextended. We're up here around 79 or 80. Breadth has really turned around. We'll look at that. Yesterday was a pretty strong day. Today's not very good, but the new highs are still higher than they've been a little bit. So let's kind of move on here. Here's the NYSE AD line, supportive of higher prices. You see this move is still taking another leg up. Yesterday was a good day. I think we picked up about 1,900 units. This I liked. We talked a little bit about some negative divergence when the market's making new highs, but you only have 50, 60 stocks making new highs. That's a little troubling. Yesterday we were up around 260. Today we're around 140. That'll probably end the day up around 150 or so. So coming back down here, but as long as we're getting some expansion in this chart, that's good for the broader market in the longer term here. Here's the S&P 500. You saw this. Here's the top of that channel where it was going up. We're overextended. This is a throw over. Again, this isn't negative divergence. This is bullish. We're overbought. Everything's moving up. Staying above this 80 level over here. So I don't see any risks to in the S&P 500. Maybe you stumble once in a while, but nothing big here. NASDAQ finally reached the top of this channel that we've been talking about for a couple of weeks. A little bit of negative divergence here, not much. I'm not concerned about that either. I think this can work its way higher on that. The NASDAQ advanced decline line, we've talked about this maybe making it needs to make a new high here and take out this number. Again, we're staying above this low, which is good, but we want to see this number propel up a little bit higher. If you go on the markets page or the new site, it's called just the home page, I think. Yeah, you can see the market at a glance, and you can watch this up. We'll take a look at it over the next couple of days. If you see this line on the NASDAQ, breaking out above this, that's good. That means that the Santa rally is going to keep on going for a while. A couple more charts real quickly. Here's yesterday's NASDAQ new highs, new lows. We got up around 264, something like that on that. That's good. You want to see that expansion, which is supportive of higher prices. It means we have more and more stocks participating. Here we have the Russell 2000. Now, as you know, that the small cap stocks are probably one of the biggest benefactors of tax cuts. And this is last Friday and Monday. You can see this thing really it came down, bounced off its 50-day moving average, and has had like a little bit of a rocket shot. Today we're down 3 points. We're actually outperforming the broader index a little bit. But this group, you have a little bit of negative divergence in here, but I think it's going to work its way out over the next couple of weeks to move higher. Nothing like this, but I do think that small caps will outperform a little bit. We're back up above this 80 level today. I want to see this 14-day RSI get back above, at least hit 70 in here. The MACD looks like it just gave a buy signal on that. The transports moving up to the top of their channel here. This should hit about 10.7. We broke below the 50, played around with 100. Now we're back above that. Everything looks strong on this. More accumulation here. Now, one of the things that has helped this turnaround has been the companies like FedEx and UPS. FedEx reports today, so you might get a little bit more of a pop in that thing. I think it must be after the close. But anyway, part of this explosion, the internet shopping and Amazon, when they're shipping all these packages or however billion they're going to ship, UPS and FedEx are the ones that are moving that stuff. So that's really benefiting that group of stocks, especially the transports in general, which also, as long as the transports are making new highs also, that's theoretically you have your Dow buy signal. This is kind of important because I've talked about this the last couple of weeks. It was kind of concerning. You've had 2 weeks where the Philadelphia Semiconductor Index did not, it was trading below the 50-day moving average. That was resistance. we wanted to see that break above there. Yesterday we gapped up, closed above it. We have a little, we're kind of stumbling in there today, off 5 points, not a big deal. But we want to see this thing, see if we can make out a new high in the semiconductor. The fact that we bounced back above the 50-day is bullish for the broader market and for the XLK, for the technology sector in general. You're also, I want to see this 30-day stochastic that I like to use. When it crosses above 50, that's your first sign that we're, okay, the trend has changed. And when we get back above 80, then you're in a strong trend going forward. So a couple more things to look at real quick, and then I'm going to turn it over to Matt. So if you want to get some questions going. Last week, the best performing sectors, and that includes this morning, technology, consumer staples, consumer discretion, materials for a second week, and then industrials. I want you to remember this, materials here. And the worst performing sectors, utilities and financials. And this is, we're going to look at the financials also. Now, as far as the utilities go, two reasons why utilities are down. They were down last week too. Number one, the fires in California are killing the utility companies out there. Bills are going to be weighed down. Number two, when you have rising rates, most investors that buy utilities are looking for the dividend, and they want, if rates are going up, there's less reason to own the utilities, and they've been kind of trading sideways to down here over the last month or so. So if you are in utilities, if you're, if you want that dividend, maybe you, if you don't want to lose your stock and keep that dividend, maybe you can sell some covered calls. There's usually not much premium in utilities, but we'll take a look at it. All right, financials, which we've talked about for months, that you wanted to be involved in financials when we, with the rates going up and the banks were going to improve, the insurance companies, that kind of stuff. Now that you've gotten this, the tax bill that's going to be coming out here, it may be time for the financials to slow down. What's going to help them is built in. Rates don't seem like they're going to be spiking up anytime soon. The market's pricing in 2 rate hikes in 2018. The Federal Reserve is pricing in 3 at the last meeting. Before that, they were hoping to get 4 price hikes in, but we'll have to see on that. But anyway, with the financials, we're starting to see a little bit of a flattening in the yield curve, which means that the banks make their money, with the broader the yield curve is. So you want to see the 2 years moving up faster than the 30-year right now. You want to see some expansion in that 30-year going up there. We're worried about, or we're watching 2.6 to see if that's going to close it. But today we're at 2.45, which is the highest it's been, I believe, the highest this year, which is helping out a little bit. All right, now look at this. This is the financials here. We're kind of stuck doing a little bit of a range. Yesterday we made a little bit of a new high, but look at the negative divergence, which means that as far as what I can see, I don't think you go out and sell your financials by any means. We've been buying them since back here in August and stuff, and I think that these will probably go sideways, but the rate of change is going to definitely slow. I think momentum will slow on those. You can see down here that you're having some distribution in the banks. They've had a nice run, a little bit of negative divergence in the 14-day. I wouldn't be buying the banks in here right now. I think I would just wait. If you can get a pullback down to the 50-day, if you're going to hold on to what you have, that's fine. If you're waiting to buy some of the Bank of Americas or maybe some of the broker dealers, I would probably wait for a little bit of a pullback. All right. And what I would like to see, what I think you're seeing a shift in is the market looks ahead for about maybe 4 to 6 months easily. And in this case, we're looking at the materials, which made a new high yesterday. It opened up this morning higher. But look at this. You're seeing some distribution here over this period, as mainly as investors and traders were looking going into financials and back into technology. But I think you're going to see now that the infrastructure talks are picking up again, you want to be in this group. There's certain segments and categories or industries that you want to have your exposure to. You're picking up momentum in this group. The MACD is starting to show that we're going to start to trend more. You're back above 80 in the 30-day. We talked about some of these groups a couple weeks ago. One of them is steel, SLX. As the infrastructure talks begin to pick up some steam, we're already past this tax cut thing. It's built into the market. So we're looking at the next, thing that's going to be catalyst for the market to move higher, and I believe it's going to be in these groups. The steel, we talked about U.S. steel and some of these. We had a nice gap up yesterday, a nice move up. I'm not sure what it's doing right now, but we're up this morning. Aluminum is one of the leading groups today. Some of the oil equipment and services are also leading the group. But again, this is a part of the area of materials that you want to be exposed to rather than starting to concentrate on the financials and maybe even some of the small caps. Now, this is one we talked about a couple weeks ago also, PKB. This is Power Shares Dynamic Building and Construction Portfolio. Look at this accumulation coming in here. Came down here, bounced off the 50, and now we're heading back up. Yesterday we gapped up and had a big move. This is home construction. The home building numbers keep getting better. New starts this morning were the highest they've been in 10 years. Yesterday, the home builder sentiment reached the highest level since 1999. So if you go into the industry group analysis, you look at the steel stocks. If you look at home builders, if you look at heavy construction, look at those in those industry groups. You're going to get a list of which stocks are outperforming. Just rate them by relative strength, and those are the ones you want to be into. Okay, the last one we're going to go before I turn it over to Matt. This is copper. Copper is always considered a leading indicator for economic growth and building infrastructure spending. As you can see here, look at this move over here. This is back here is when Trump started to say, okay, we're going to roll off the infrastructure spending in January. Boom, 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 boom. It's up every day, and this turnaround in the accumulation. Again, when we talk about it, you see a turnaround like that, that's institutions buying. That's not you and I going out there saying, hey, let's buy a little bit of copper. This is big money going to that. It came down here, it was looking weak. He mentions infrastructure spending. Boom. We're up here pushing the 80 level. Momentum's picking up. The trend in the MACD is also picking up. So this is telling you that the building's going to happen, infrastructure is going to happen, and that the economy's still on good legs. So we're going to moving on that. I'm going to wrap it up, but again, let's put the banks behind us a little bit. No problem holding on to the banks. I think they go sideways to maybe pull a little bit back and forth in here for a little while, but we want to own them in 2018. But we're going to focus on this next bill that's coming down the line. That's going to be your infrastructure spending, and we want to get that. Okay, I'm going to bring Matt in here now. Again, most of you hearing some audio problems. That was a 12:08. I hope that's finished. While he's talking, I want you to go ahead and, if you have some questions about the new site, if you're having trouble finding things, that type of stuff, we'll take a look at that. Now, I'm going to close this down, share the screen so he can get in here. I appreciate you taking time to join us here. If you have some other questions for me, I'll try to get on here at the end of the thing also, but Matt's going to try to get you going here. Okay, can you see that? You should be good. You good? All right, I'll let Matt Sandy take it over. Here you go.
Okay, so hey everybody, where's your mouse? Here we go. This is the new site. So right now, retail customers have been moved over to this. Schwab customers, I'm sorry, so right now it's retail customers and E-Trade customers. We haven't moved over our Schwab customers yet. Or TD and Scottrade. So if you're a customer through any of them, then you are going to have access to this in the near future, but not quite yet. Basically, one of our ideas for redoing the site was it was originally built in 1997. We needed to update it. We wanted to make some stuff a little bit easier to use. We also wanted to surface some functionality and features that a lot of people didn't know existed. So this is our home page. Basically, what on the old site was the markets page. It's where you get the daily market comment, the market letter. You can watch the Tech Talk, which is what we're doing right now from the previous week. On the Edge Monthly, Dr. MarketEdge talks stocks. We've also got some market-wide indicators, such as the S&P oscillator. You'll hear Kramer talk about that occasionally. We've surfaced our market posture in CTI, so it's not buried in the letter anymore. We've got our performance highlighted in this chart. You know, what we're looking at right now is out of all of our stocks, 48% are long, and of those 48% that we have a long opinion on, right now 89% are over the price that we have formed that opinion on. This is the market recap. In order to get to market at a glance, you can click market recap, and that'll take you there. Or you can click market at a glance right down here. So this will take you to to this sort of collection of charts, which, to my knowledge, this market at a glance is the only place where all of this stuff is consolidated into one place. You know, advanced decline lines of the New York Stock Exchange and NASDAQ and all of that stuff. Our stocks page, similar to what it was previously, except we've surfaced the other functionality. So on the old site, you could search for a stock. We'll search for Apple, let's say. Pull up my information on Apple. Sorry, 1 second. Let me log in as myself, so we'll be able to look at my stock watch list. Okay. So here we are on stocks. We pull up Apple. Now on the old site, we had this stuff, company profile, financials, etc. It was hidden in a drop-down. A lot of people thought that stocks was only the second opinion page. It's actually a little bit more robust than that. It has company profile. It has financials. It has a chart, which is an interactive chart that you can scroll over, that you can go over certain periods of time. You can scroll out the total length of the history of data that we have for that chart. We've got a point and figure chart. We've also got the Technoscan report, which is PDF, which is taking a second to download here. But it's a PDF that is easily printable. There we go. PDF that's easily printable. It gives you a little bit of a deeper dive on the stock, and it includes a lot of technical analysis as well as technical events. We've included a chart on the second opinion page, which you can hover over. We've also got, if you click this, it'll open in our new smart charts, which you don't need Java for. It'll run in any browser. You can add this stock to any of your stock watch lists. So from here, if I search a stock and I want to add Apple to my value stocks, you just select that. It's now in that stock watch list. You can finally view what industry group this stock is in. And if I click this, it will take me to this stock's industry group. Finally, for some of these terms, if you don't know the definition, we've surfaced education throughout the site. So if you want to know what a beta is, you just click this question mark next to it. You'll see this pop up, what's it mean? And it'll pop up a definition of what this term is. So rather than having to go to glossary and then go back to where you were, are we still on?
Can you sort by industry groups?
Sort by industry groups?
Can you see the questions coming in?
Sort by industry groups to find stocks. So yeah, let me show you that real quick. So here we are in our industry groups. This used to be in advanced tools, and we said, you know what, this deserves its own section. So when we go in here, we have our industry groups. You can search the industry groups. So if I want to search airlines, I just type in airline, basically. I can sort the columns by relative strength, or really any of these. I can sort them by name. The real power here that you can specify what category you want to view the industry group in. So whether or not you want strong, right now we're just looking at strong industry groups, improving, deteriorating, weak, upgrades, downgrades, etc. Finally, you can export the contents of this industry group. Forgot to mention also, wherever you see a stock symbol or in industry groups in ETF Center, one of these category names, you can hover over to see if it's a stock, it's going to be the stock's 1-year chart. If it's an industry group or an ETF, it's going to be a comparison of that industry group or ETF's performance over 1 year compared to the S&P 500. Yes, so you can do a drill down. Let me just show you this real quick. You can also hit this export. It's going to export it to an Excel spreadsheet. That was one of our more requested features. So that opens up the file in an Excel spreadsheet, and then you can slice and dice and do whatever you want to do with that spreadsheet. Finally, so let's drill into airlines. You just click airlines. That's going to pull up the performance of this industry group, as well as the content, as well as the stocks that are in that industry group. So here's United, SkyWest, so on and so forth. From here, you can also, and really from anywhere where you see this table format that looks like an Excel spreadsheet, you can add stocks from. So if you have a stock watch list that you have for stocks to watch, you could go into a industry group that's strong, sort it by strength. So you want to do the outperforms. You like the looks of JetBlue Airways. You can add that very easily to your stocks to watch list. Yes, so we are going to be adding list status back to our stock watch. That's something we're hoping to do in the very near future. And that is basically one of the only features that didn't carry over into the new site. ETF Center works very similar to industry groups, except these are ETF categories. So currencies, bond, government, interim term. So same sorting by condition, whether it's strong, improving, so on and so forth.
46 now rather than 21, 23.
There's 46 now rather than whatever our previous number was, which I think was probably half of that.
Yeah, 23.
If we don't have any in that condition on this particular day, it'll inform you. But since these change every day or every market day, if this is something you're interested in, if you're interested in upgrades, be sure to check back the next day because it's quite likely that there will be industry groups in that condition the next day. Stockwatch. Stockwatch is probably one of the places where we made the most changes. Basically to make it much easier to use. So previously, making a new watch list, adding stocks, deleting a watch list, changing the name, all of that was somewhat difficult, including just when you went to the stock watch, you didn't see a stock watch list. You'd then have to select a report type, select a stock watch, and then select a form of analysis. We said, we're going to introduce this idea of a default list, and that's just what you land on at first. If you don't have a default list, you just land at the first in this list. If you want to make one a default list, you go to that stock. I'll make Money Runner watch list as my default list. You hit this thumbs up, and as you can see, it'll show that text, make default watch list. I click that. It updates that to my default watch list. So now when I go to stock watch list from another place, this is the stock watch this is the list that it lands on automatically. I can edit the name. You hit edit, you change it, you hit save, that's what does it. You can export that stock watch list to a spreadsheet, again, just like industry groups, really just like everywhere. You can delete the entire stock watch by hitting this, but we give you a prompt just so you don't accidentally do it. So are you sure you want to delete this list? I don't want to delete this one, so I'm going to say no.
Individual stocks, a lot easy.
To delete an individual stock, you hit the X. I'm deleting Apple. Apple's no longer in my list. To add a stock, I go down here to this enter stock symbol to add. I'm going to add, let's see what I don't have. I'm going to add Ford. now I have Ford right here. I'm going to delete GM, get rid of GM, and now I'm going to show you the ability to import multiple stocks. So if you want to add one stock at a time, this is the best thing to do. You can search by company name. You can also just search by symbol. But if I want to import multiple stocks, so I'm going to add Apple and GM. Notice this is in alphabetical order. We don't have Apple or GM. I'm going to import stock watch list. I'm going to say GM. I'm going to say Apple. For this, you actually have to do the symbol right now. We might change that in the future, but for now, it's enter stocks, or enter the symbol with each symbol separated by a new line. Hit import. We now have Apple and GM right here. We can change report types. I can do this big report, my default report, various reports that you create. So these are custom reports that you can create. We also have some default reports that are just automatically provided, or predefined, so everyone has access to these default A and default B. If you want to add particular columns, you can create your own report, which I'll show in a second. We also have some predefined lists. So finally, making a new stock watch list is very easily. You just hit create watch list, and we're just going to do test list. We save it. Here's my test list. I can immediately start adding stuff to it. Screening tools, same idea as the old screening tools, except except the main difference is, okay, if I want to set the price, so real quick, the old screening tools, you would define the query, so meaning you would set all the criteria to what you want it to be, and then you would run it. And oftentimes, when I was defining criteria, I would build this query and then run it, and I wouldn't get anything. So we said, okay, well, it would be interesting to run the query as you add the criteria. So if I put a price min of 100, it's too many stocks, actually, in this instance. If I want to winnow it down a little bit to 120, this one might actually show me some stocks. There we go. So 149 stocks with a price between 100 and 120. Over here, if you want to remove the criteria, you can just you can either erase it from here, or you can click one of these things to remove it. If you want to add more technical stuff, we have pricing and moving average, so within 1% of new high. We'll do near resistance. That gets me 13 results. One of the cool things that you can do here is you can save this to a watch list. So now that I've got my criteria set, this is my strategy. I'm not advising this strategy. This is just for demo purposes. But once you've got this, your strategy defined, you can then save it to a watch list, stock watch list. So I'll just say screening tools watch list. Save. That's just saved the stock watch list. Trading ideas, same idea as previous trading ideas, except rather than the column, the rows up at the top, we basically have just added this accordion here, what's called an accordion menu. See how it opens and closes kind of like an accordion? Market analysis, stock analysis, special situations. It's all the same trading idea tools provided by the old site in a way that's a little bit more accessible. Early entry longs we'll take a look at. Again, one of our ideas was some of this stuff, some of these terms and phrases and stuff are a little bit might be a little confusing to people. Wherever you see a question mark, you can click on it and you're going to get a definition of what this thing is. So what is early entry longs? You click that question mark, you get a nice definition of what early entry longs are, basically what we're looking at when we define something as an early entry long. Same goes for terms here. So support, entry, entry is pretty self-explanatory. Volume, so on and so forth. All the columns are sortable. Again, you can export here. You can hover over for the chart. You can also add these to your stock watch lists, just like so. Advanced tools, exact same idea. The one difference, one of the big additions here is for our point and figures, we tell you the formation, but then we'll also allow you to drag your mouse over what the formation is, and it'll give you a nice P&F chart pop-up. You can also, from here, drill into the second opinion report of one of these stocks. So we hit that. Now I'm in ABS's second opinion report. It's a point and figure double top breakout. Yeah, that's how that works.
When will Schwab be getting it?
Schwab should be getting it this week. What's today, Tuesday? I think we're talking Wednesday or at the latest Thursday for Schwab. So in the very near future. We also have, something I forgot to point out, is we also have this live chat thing, which we've had a lot of our users using to say, hey, here's a quick question. How do I do this? How do I use this particular, in trading ideas? How do I best use something like, up price gap? It's a way for you to communicate with our tech support people, or with our support people, for two kinds of questions. Questions about the technology itself. Hey, how do I use this thing? And hey, how should I use this thing? How can I set up some advantageous trading or determine some good stocks with this tool? Finally, charts. We have this is our redo of Smart Charts. It's not quite yet as fully featured, but we're working on it. It's a charting tool. It includes the ability to make annotations, so we can do a Fibonacci retracement. We can draw trend lines. We can even do a channel, just like so. We can also just search stocks. So let's change this to Facebook. It updates to Facebook. Now we want to do an overlay of a let's do a 250-day simple moving average. So there we go. So you can add simple moving averages, exponential moving averages. You can also do indicators. So we can do, let's say, in a rune, we turn it on. There it is, right down there at the bottom. We can also scroll over this timeline to make this timeline as long or as short as you want it to be. We do not yet have a way to save the settings on chart, but that is going to be introduced in the very near future. You can also print the chart. So previously our old Smart Charts didn't allow printing. Now, if you hit this print icon, it's going to pull it up, and it's not absolutely perfect, but it's printable.
That's for the other reports too.
That applies basically everywhere. So when I go to the weekly letter, let's say,
yeah.
This print icon right here, rather than printing out a web page, you can click that and you can print out the data and the text itself. So rather than having to print out web pages, which doesn't, that's not a great way to print stuff out, these icons provide you the ability to print out something that's more like a real report. Finally, I just want to show you how to create a new stock watch list. So here's one of our help support guys coming in asking, hey, how can I help you? You basically could just chat with him. Hey, it's Matt. Doing a demo. Let's go look at manage report type. Which is creating your own custom reports. Manage report types. You can get at it from this, clicking this thing. You can also get at it from the account center, but I'll click this thing to take it here. So here's where we build custom reports. We make a new report. We enter the name of the report, Matt's new report. Symbol is automatically included as the very first column because we're enforcing that because just in case, we don't want people to have a bunch of reports where it's just data and no symbol because then there would just be no context. So the one thing that we do enforce here is symbol is the first thing. So then I want to put company name, change, C rate, buy, sell, stop, beta, opinion date, opinion price, and let's say relative strength. Is that RSV? 50-day relative strength. Here it is. We create a report. That's going to be Matt's new report right here. So now wherever I am in the interface, I'm going to be able to choose Matt's new report, and it's going to have that stuff, those fields that I added to it. That applies for screening tools. That applies for trading ideas. So here I can run Matt's new report. In advanced tools, I can run Matt's new report, so on and so forth. So your custom reports are available everywhere where you can change the report type. We have video tutorials over here if you go to your name. For some users, it'll say My Account. If you hit Account Center or Help Center, it will take you to, Help Center takes you to this Getting Started page, which has some articles about how to, about some of our terminology. Video tutorials has videos that we've made which will walk you through, narrated by me. There you go. That will give you some sort of an idea. They're very short. They're one to 2 minutes. That'll just give you a quick idea of how to use these screens until you figure it out.
It's designed mainly for new users for that.
Yeah. It's a sort of training. It's basically video tutorials training. We also still have our old glossary, which is just a list of stuff. You can also search that glossary by the name of the term that you're looking for. Finally, if this is the other way to get into manage reports through here, just to let you know. You can delete reports if you find yourself having too many reports. I want to get rid of, let's get rid of that report that I just created, delete it, gets rid of that report. You can also edit existing reports. So I pull up, let's choose one with less columns. I pull up this one. I'm going to add day low, day open. I hit that. Now it's added 2 columns to my report. And when I go over here and I look at this report, it's going to be day low, day open. Finally, one final thing about custom reports is you can make one of those custom reports default, which literally just means clicking this, make default. I'll show you an example. We'll do this one. So now when I go to this report, it's going to pull up that default custom report type. That's the report I like. That's the one I want it to land on by default. It's doing that now. Here's one last thing on Stockwatch. Filters. This is filters. So you click, basically anything up here, it'll open this menu, and then I can filter by long, neutral from avoid, just the early entry longs, early entry shorts, so on and so forth. All of these conditions that you could filter by in the old Stockwatch list are available up here. If that, hopefully that makes sense. We personally think it's all way more intuitive and easier to figure out. And a lot of our users, even the ones most resistant to change, when they first get on, they say it's different. Within 2 days, they say, thank God, this is so much better and easier to use. So if you're having issues with the change, give it a chance. Try to use it. We're fairly confident that you'll end up thinking that we've added a lot and that it's worth the change.
Is there still a contact us thing on there for them?
Yeah, so we can best contact us is through live chat. You can also hit, the best way to contact us is really through live chat. You can also send an email to support@marketedge.com. We're also going to be pushing some educational stuff through the feed periodically. So right now we've got all about the new stock watch. Basically, it's just surfacing, hey, here's a new feature. So keep an eye out for that kind of thing. And this will be a video with a, bullet points of what the added features are, and then a quick video of how to use them.
We better wrap that up then.
I think that's about it. Does anyone have any questions? Do we have any questions over there?
Go to the, over here.
Okay.
I think he's probably gotten most of them. This, while you're on here still, we're not going to have a tech talk next Tuesday or the Tuesday after, so read the market letter. I want to wrap up with a couple of things. We took a couple on the portfolios that we've been talking to y'all about. We sold, in the emerging market, we sold AAXJ at 75.47, had a 6.75% gain. We've added EIDO at 27.39. It's an Indonesia fund. We also sold ISRG in the value fund for a 36.5% gain. We also sold HOLI, I think it's Holly Automation, for a 9.5% gain, and we sold KAI in the small cap growth for 12.5% gains. So that's what's going on. We're not adding any positions to those. So if you have any questions, email me back later on, or go to the chat thing, and we'll try to get back to you later on. And again, no tech talk for the next 2 weeks. So read the Friday market letter. Again, thanks for taking your time. I hope you got something out of this, and that they've done a lot of work on this new site. I think it's pretty awesome. It's very easy to use, more intuitive, and you can find the stuff. But there's going to be some things you're going to not be able to find or whatever. Just get us the questions, and we'll help you make this transition as smooth as possible. All right, we'll talk to you next week, or in 3 weeks. Bye-bye.